How to write off a car lease with an LLC. Let's get right to it. Most of you are spending like personal expenses. So you're not deducting your phone, you're not deducting your car, you're not deducting a home office. You have all these deductions, 81,000 pages of code. Why aren't you playing more strategically? You're paying the IRS versus yourself, and that is your interesting choice. So when it gets to company structure, we're going to talk about three things today. We're going to talk about the exact steps to qualify for a car lease inside your LLC as a business deduction. What are the best practices around that? Do you lease or do you buy is a whole nother conversation. And then the common mistakes we see with most people. And again, I started the video with some of the common mistakes, which a lot of you want to live what I call corporate life. And I made up that term, so I know it's not something you're going to go search. So corporate life is when you and your family are living and you can actually bring those expenses, which would normally not be deductible if you were just an employee. So you have to have a company and a legal reason to make money. That's the exact step. So if you don't have a company, which you need to call our office, get a one-on-one appointment, and start talking to our expert team. So we have 81,000 pages of code. Without a company, you can't write off a lot of these things. You get a little tiny Schedule C at best as a sole proprietor. So first exact step is to get incorporated, get the right structure, and start spending differently. So then you got to say, well, what are the steps to get a lease? And how do I make that decision, lease or buy? So we're going to keep this on lease because this is exactly how to do a car lease. Let's just talk about some best practices. Whether you buy or lease, you've got to keep track of, was it a personal trip or a business trip? Now, once you truly start living corporate life, most of us would say 90% of everything we do all day long is living that life towards whatever business we're doing, whether it's real estate, whether you're a coach, consultant, author, trainer like I am, whatever you're doing, direct sales company. What is the legal reason that you have to write off a vehicle? Number one, and what's the percent? So you got to keep track of your mileage, keep track of your time. If you put the lease in your name, then you would do an expense report to the company to pay you back. If you put it in the company's name, which you're going to have to look at registration and insurance. Those are going to be your biggest variables per state. There are some states where it's better just to put it in your personal name because of registration and insurance and the requirements than put it in your company. And then there's other states, like here in Nevada, where you actually can pretty easily put it in your company and then you do the expense report the other way. And anything that I use, because I purchased a vehicle in my LLC's company name. And then if I ever use it personally, then the company would send me an invoice for the time that I use it, and I have to pay the company personally back. So whichever way you go, you've got to keep it clean if you got to keep track. The IRS loves this as an audit, and I'm not going to freak you out and say you're going to get audited because you just want to keep good records the whole time. So some of the best practices, let's just say you did a lease and the deduction of the percent of business, and that's really up to your tax strategist. So again, you got to call our office. You can't just make this up and go, look it up yourself. And I can promise you, if you're doing TurboTax, H&R Block, or some of the smaller firms to do your bookkeeping and accounting, especially your tax return, you're not going to have the detail. So what happens in those models of TurboTax and H&R Block and some of those is they're just reporting the history of what you did. They're not forecasting and strategizing how you should be doing it, which is why you're here on this channel. So while you're here, subscribe to my channel, click the notification button. I want you here 5 days a week and really understanding this content. So if you're going to deduct a percent of business usage on this vehicle, it's either going to be in the LLC's name, which is ideal. If you live in a state that it's not ideal to put it in the LLC's name and better insurance and registration for you, then you're going to have to do expense reports back and forth. So let's just say your yearly lease payment is $4,200 and you use your car 50% of the time. You can deduct $2,100, right? So it's a proportion of your total lease payment of whatever that is and whatever your tax strategist will allow you to do. Now, there is a Section 179 deduction, and that has changed in my understanding. It used to be if you owned a vehicle, purchased a vehicle, 6,000 gross weight vehicle, you could write off up to $40,000 year one. And that was a huge strategy for a very long time. Now, that number varies. And again, state by state, they're making different regulations. So you got to check in on that. The last variable of best practices that you need to consider that I didn't bring up when I talked about registration and insurance is the liability, is what's the liability of the rest of your family? Because many of the larger families that we coach and mentor and guide, they actually have an equipment company where they put all their vehicles in. So it's a fleet. And then you have fleet insurance, and that includes like 16, 17, 18-year-old kids. So your family would own a vehicle leasing company or lease purchasing company and lease to different companies. You can get as complicated as you want in this. It is doable, absolutely. State by state, different regulations. Is it a deduction? 100%, as long as you track it and you're living corporate life. Now, to that point, if you don't really understand what I mean by corporate life, if you look in the description below and click on the link for the Millionaire Intensive, I'm giving you 2 free tickets. You can upgrade to VIP when you call our office to confirm. That would be great. The common mistakes are the commingling. The common mistakes are thinking you're going to write off the same sort of magnitude of deduction you can do. You could do an entire vehicle resolution to a company and dedicate the vehicle, the car lease, 100% to the company. But then again, you have to be very mindful. You're not going to commingle and use it for any personal use or do those expense reports. Again, a tax strategist on our team will guide you and tell you exactly the percent from vehicles to phone to home office, home utilities, all of it. So there is a percent based on how you make money, when you make money. If you're a W-2, meaning you're an employee and that's how you make money, your restrictions are going to be higher than somebody who works for their own company. So again, call our office. Check that out. And while you're on our YouTube channel, let your kids start listening to this channel. Encourage them so you have a family conversation in your household. We have YouTube journals. Again, you can grab one in the description below. They are custom designed for this channel, which is what date, what was the video about, what did you learn, and what are you going to do are the biggest points to make sure you have an action plan to work with. So we're here again 5 days a week. Subscribe. Share this channel with as many people as you can. And if you have any tech questions, call our office. The number is in the description below. We'll talk to you tomorrow.